You've been inside this bank for 11 years. Your desk is on the 14th floor. You have a corner window, a parking spot with your name on it, and a compliance badge that gets you through every locked door in the building. Your title is Senior Relationship Manager, which is a polished way of saying you handle the accounts nobody else wants to ask questions about. You're good at your job. Genuinely, technically good. You know the Bank Secrecy Act the way some people know scripture. You know exactly what triggers a suspicious activity report, exactly which transaction patterns light up the system, and exactly how many hours it takes for a flag to reach a human being who actually cares. That knowledge made you valuable. It also made you dangerous. It started 3 years ago, not with a dramatic offer, not with a briefcase or a threat. It started with a referral from a man named Devin Cole. You'd known Devin since your second year at the bank. Black hair, always neatly cut. Black pants, dark navy shirt, every single time you saw him, like he'd decided on a uniform and stopped thinking about it. He worked adjacent to finance. Consulting, technically. You never asked for more detail than that. Devin had the specific quality of someone who knew exactly what was happening around him, and chose very deliberately what to acknowledge. He referred clients your way sometimes. Good clients. Clean paperwork. Consistent deposits. No friction. You never had a reason to look sideways at any of them. Then he called you on a Tuesday evening and said he had someone who needed a private meeting. The man who walked into your office the next morning was named Kem. No last name offered. He didn't volunteer one, and you didn't push. He was quiet in a way that felt intentional. Not shy, not nervous. Quiet the way a room is quiet right before someone starts talking and changes everything. He sat down across from your desk, placed a single folder on the surface, and slid it toward you without a word. You opened it. Numbers. Shell company structures. Accounts spread across 4 different jurisdictions. And at the center of it, a flow of money that needed somewhere clean to land. He watched you read through it. When you looked up, he was already looking at you. He said one sentence. He said he understood you were someone who appreciated how systems worked. You told him you couldn't help him. He nodded like he'd expected that. Then he told you what the arrangement would pay. You said nothing. He stood up, straightened his jacket, and left the folder on your desk. He said you had a few days to think. He walked out. You sat there and stared at the numbers. Your office felt smaller than it had that morning. You weren't in debt. That's the part nobody understands later. You weren't desperate in the way people expect. Your mortgage was manageable. Your accounts were fine. But fine wasn't the same as secure. Fine meant one restructuring, one bad quarter, one new VP who wanted to clean house, and everything you'd spent 11 years building could dissolve in a Tuesday afternoon meeting. You called Devin. He picked up on the second ring. You asked him what exactly he'd just walked into your office. He was quiet for a moment. Then he said Kem was reliable, said he was efficient, kept things organized, and never created problems for the people who worked with him. You asked what happened to people who said no. Devin said that wasn't how Kem operated. He said Kem simply moved on and found someone else. That was somehow worse than a threat. It meant you were replaceable. It meant someone else would do this and you'd still be sitting on the 14th floor, making the same salary, watching someone else's number change. You told Devin you'd think about it. He said he knew. He didn't push. He never pushed. That was his thing. You called Devin back 2 days later and said yes. He showed up at a bar near your apartment that Friday. Black pants, navy shirt. He set a drink in front of you without asking what you wanted. Sat across from you and said nothing about the decision you'd just made. No congratulations, no speech. He just drank his drink and asked if you'd caught the game last night. You said no. He said it was decent. That was the whole conversation. You understood, in that specific silence, what kind of arrangement this was going to be. No drama, no ceremony, just the work. The mechanics were straightforward, at least on paper. Kem's money came from sources you decided early on not to examine. You'd seen enough to know the shape of it. The first stage was placement. Cash arriving through a network of small businesses, a laundromat, a parking garage, a wholesale grocery distributor with branches in 3 cities, each one reporting just enough revenue to justify deposits without exceeding the thresholds that automatically triggered review. You processed the accounts. You approved the relationships. You filed the paperwork that made each business look exactly like what it claimed to be. Legitimate. Unremarkable. The kind of low-margin business that every compliance officer skims past on a Tuesday because there are 40 more files waiting. The layering came next. That was the part that required real skill. Transactions moved between accounts in sequences designed to be exhausting to trace. A transfer here, a wire there, an intercompany loan between two shell entities that technically existed but had no employees, no physical address, no operational reality beyond a filing cabinet in a registered agent's office in Delaware. You mapped the routes yourself. You knew which jurisdictions shared limited banking data. You knew which transaction types received less automated scrutiny. You knew exactly how long a paper trail needed to be before a human investigator would lose interest and move on to something easier. 11 years of institutional knowledge. You'd built the exact expertise needed to take the system apart from the inside. The integration was almost elegant. By the end of the cycle, money that had started as untraceable cash was sitting in accounts tied to real estate purchases, equipment financing agreements, and investment portfolios. Completely clean on paper, completely legal in appearance. Chem's operation processed roughly $4 million through your channels. In the first 6 months alone, your cut was deposited to an account in a name that wasn't yours. A shell entity Devin had set up. You didn't ask how. It appeared on your personal ledger as consulting income, properly documented, correctly taxed. That was the detail that kept you sleeping at night, at least for a while. You were technically declaring it. Devin would check in every few weeks. Not at the bank. Never at the bank. Always somewhere casual. A coffee shop. A parking garage near your apartment. He'd sit down, dark pants, navy shirt, and give you the update in about 3 sentences. He had this quality of compressing information, nothing wasted. Once he arrived and placed a paper cup of coffee in front of you before sitting down and said 3 things. Deposits are clean, routing needs a small adjustment next cycle, and Chem says you're doing good work. Then he picked up his own cup and asked if you'd eaten. That was it. You found that you genuinely trusted Devin, which was probably the most dangerous thing that had happened to you so far. 14 months in, the bank announced a compliance audit. External firm. Deep review of commercial relationship accounts, specifically accounts in the small business tier, your tier. Your stomach dropped through the floor of your apartment when you read the internal memo. You sat at your kitchen table in your gray hoodie and read it 4 times. Then you texted Devin. 30 seconds later, your phone buzzed. He said, "Come get coffee." You met him in 20 minutes. Black pants, navy shirt. He was already seated. He let you explain the whole situation. He nodded twice. Then he said the accounts were structured to survive exactly this kind of review. He told you the business documentation would hold. He told you to act normally, review your files the same way you reviewed every other file, and answer every auditor question as if the answer was obvious. Which it would be. Because on paper, it was. He was right. The audit ran for 6 weeks. 3 auditors with access to your full commercial portfolio, and nothing surfaced. Nothing. The shell businesses looked like shell businesses that were real. The transaction patterns looked like small business patterns. You answered questions calmly. You flagged 2 unrelated accounts with minor compliance issues to demonstrate you were doing your job. One of the auditors thanked you specifically for your thoroughness. You smiled and said you took the BSA seriously. You meant it. That was the sick part. You did take it seriously. You just also knew exactly where it had holes. The problem came 18 months after that audit, not from a regulator, not from a colleague. It came from an account you'd missed. A small one. $43,000 that had moved through a subsidiary account in a pattern that matched a typology FinCEN had just released guidance on. Brand new guidance. 2 weeks old. The bank's automated system flagged it. A junior compliance analyst named Torres picked it up and routed it to her supervisor. Her supervisor sat 2 floors below you. You found out on a Wednesday morning when you saw the internal routing slip in your email. The account number was familiar before you finished reading the first line. You left your desk, took the elevator down, and walked to the men's room on the 12th floor. Cold water on your face. You looked at yourself in the mirror. Short black hair. Your gray hoodie was at home. Your work clothes didn't feel like yours in that moment. You thought about the chain. That account connected to a holding entity. The holding entity connected to 2 others. Those connected to the commercial accounts you managed. If Torres's supervisor pulled the full thread and actually followed it, the whole architecture was visible. Not obvious, but visible to someone patient enough. And compliance supervisors who wanted to make their careers had a specific kind of patience. You called Devin from the parking garage. He answered. You explained the situation in 90 seconds. He was quiet for 4 seconds, which was long for him. Then he asked which supervisor. You told him the name. He said he'd look into it and hung up. That night you sat in your apartment and didn't eat. You pulled up the FinCEN guidance on your laptop and read through it 3 times. The typology match was real. $43,000 in a pattern that anyone with current training would recognize. You'd structured everything around older guidance. The update had moved the goalposts by 6 months. 6 months. That was the margin. One piece of regulatory language you hadn't accounted for and the whole thing was leaning. Devin knocked on your apartment door at 9:15 that evening. Black pants. Navy shirt. He came in, sat on your couch, and set 2 cups of coffee on your table. He told you the supervisor wasn't going to be a problem. He didn't explain how. You didn't ask. He picked up one of the cups, looked at the wall for a moment, and said the account needed to be closed. Not moved. Closed. A clean voluntary account closure with a standard business reason documented. He said it would look like routine portfolio management. You said the timing was going to look reactive. He said no, it would look like 11 months of planning because you were going to backdate the internal review memo that justified it. He said you had the access to do that. You did. You went back to the bank the next morning. You pulled the account file, drafted the review memo, adjusted the creation date, and processed the closure. Every action logged under your credentials. The memo cited a routine review of the small business tier for accounts that fell below minimum profitability thresholds. Boring. Administrative. The kind of thing that generated no secondary questions. Tora's flag still existed, but it was now pointing at a closed account with documented justification for closure. Her supervisor reviewed it, noted the timing as coincidental but explainable, and filed it without escalation. You were watching the internal system updates from your desk. When the status changed to resolved, you let out a breath that felt like it had been sitting in your chest for 4 days. Kem sent nothing. No acknowledgement. No message. That was his way. Efficient meant no unnecessary communication. The operation continued, you processed the next cycle. The numbers moved. Your account balance in the shell entity crept upward. You met Devin at a coffee shop 2 weeks later, and he set a drink in front of you without asking, sat across from you, and asked if you'd watched anything good recently. You said you'd been rewatching an old series. He nodded, said he might check it out. The whole conversation lasted 8 minutes. Neither of you mentioned the account. Neither of you mentioned Torres. Neither of you mentioned the memo you'd backdated, the career risk it represented, or the line you'd crossed that was somewhat different from the line you'd been crossing for the past 2.5 years. Adjusting transaction structures was one thing. Creating false documentation in a regulatory review context was something the DOJ called obstruction. You knew the exact statute. You'd known it since year 1. What you didn't know yet was that Torres had taken a screenshot before the flag was resolved. Not official. Just habit. She'd done the same thing on 3 other accounts she'd flagged that eventually closed before escalation. She had a folder on her personal drive. 12 screenshots total. She'd mentioned it to no one. She was still deciding what they meant or whether they meant anything at all. She was 26 years old and still figuring out how cautious she was supposed to be. You didn't know any of that yet. You were still on the 14th floor. Corner window. Parking spot with your name on it. Compliance badge that opened every door. Kem's next cycle was already in motion. 4 accounts, 3 jurisdictions, and the first deposits were scheduled to clear by Friday morning. You were looking at the structure on your screen when your phone buzzed. Devin. A text that said simply, "Check your email." You opened it. An internal memo from legal. A formal request for your cooperation in a broader Bank Secrecy Act review. Triggered by a referral from FinCEN. They were starting with the commercial relationship tier, your tier. The memo said you'd be contacted to schedule an interview. It said to retain all relevant documentation. It said,